Well, keeping up with that theme regarding Barclays Chief Executive Antony Jenkins, who has stepped down after only 3 years at the helm of the bank. Well, CNBC Europe caught up with the chairman, John McFarlane, about this particular announcement. Let's take a quick look.
We've been on a journey for the last 6 years after the global financial crisis to recovery of the bank and to stabilise the situation. Of course, in between we had the management crisis, as you know. That's been a very important period for the company, and as far as we're concerned, Antony's done a brilliant job to stabilise the organisation and to take us where we are now. The problem is that going forward, there's a different agenda now. We just had a strategy meeting of the board where we endorsed the way forward, and what was clear was that the execution of that strategy, bringing forward the returns for shareholders, was the absolute priority, and therefore we wanted to bring it forward.
What has Antony done wrong?
No, he hasn't done anything wrong. He's just the right guy for that time. He's not the right person to take us forward.
But I'm sure you said on the investment call this morning that actually it will be the same strategy pretty much in the short to medium term as you had under Antony. Is he just not good at execution?
Yes, the question is execution. In that, you know, I've been here a couple of months and I've been on the board for slightly longer. It's been perfectly obvious to me that there are a number of issues here. One is it's a very clunky type of organisation. It's not fast-moving, it's not lean, it's not agile. It is with customers, but it isn't in terms of execution. You know, our efficiency levels are low, our capital has been used in the wrong way. You know, we really need just to deal with that very quickly.
So Antony had the right idea. It was the right idea to go back to basics rather than, as Bob Diamond had, as an investment bank-focused institution, but he just wasn't good at executing. Is that the key?
No, he was good at executing what we asked him to do at that time. What we're asking him to do now is different, and the board believes that the probability of my executing is higher.
But the cost-to-income ratio, 70%, way too high. Your capital levels, there are concerns about that. We can address that as well. But it's basically he didn't cut costs aggressively enough, and is that one of the major criticisms that you're going to be better at?
No, I think it's you know, what we need to do is grow ROE and grow earnings, and then throw off cash to increase the dividend. Now that's a complex story. It's not just about costs. You know, it's a great brand, and therefore we've got a great opportunity now to grow revenues. Yesterday I chaired an executive committee and told them to get on with it. We identified some ways we could grow revenue, and we'll talk about that later on.
Has Barclays lost its identity? It's not the only bank that's struggling to reinvent itself post the crash, post Lehman's, but has it lost its identity, and that's part of the mantra going forward? No,
the brand is truly superb. In my day in London, this was the preeminent financial institution. It still is, right? And so we haven't lost that. Of course, we lost our way a little bit after the global financial crisis, and therefore we need to stabilise and recover the bank. That is nearly over. And of course, we've had headwinds that we've been dealing with those. What we can do is take it to a new position and get the rightful position that the bank has always enjoyed.
What role does the investment bank play within that as well? The return on equity, return on capital at the investment bank is really, really poor, and morale, I'm told, is pretty poor at the investment banks on both sides of the Atlantic. What can you do to turn around the investment bank?
The first thing I did this morning was to go into the investment bank, and I can assure you morale is not poor there. I was in there.
I had a quote, sir, from one former employee who said they were cutting MDs left, right and centre without any real rationale behind it. Morale is not what it should be.
Well, former employees are never excited about the organisation, so there's, you know, you've got to be careful with that. You know, so the investment bank's got an important role to play, but we've been very careful to say that we want the proportion of the investment bank to be a smaller part of the organisation that's been strategically under Bob Diamond, and that will continue, but it's a meaningful part. And remember, what the investment bank, although it's global, you know, where are we successful and what are we good at? We're very successful in Europe and we're very successful in North America. You know, that's the guts of it, although we have touch points elsewhere.
Was that one of Antony's big failings, to actually turn around the investment bank?
I think remember, the investment bank is doing as well as the industry. You know, the industry is not doing brilliantly at the moment, but we had a good quarter, and the investment bank currently performing very well. So we're not out of sorts with the industry investment banking. It's doing okay. I think the relationship was a little strained with investment banking, and I think, you know, the fact that I've run an investment bank can improve it.
But the fact that you went straight in to speak to the investment bankers this morning proves that he didn't have a good relationship with them, and that was something perhaps that the independent directors picked up on, that Mike Rake and others looked at?
Yes, certainly that was part of it, but I think it's something to do with style and of course, the nature of the task ahead. You know, and so I think that's a big part of it. But I don't think I just feel that it's a natural place for me. I've run the markets division, and so forth. So I went to see the markets guys, first, and of course I love that area.
Sure. Is Tushar Morzaria going to be the next CEO of Barclays?
Oh no, we're not going to speculate about who's going to do that. I'm going to play that long. What I've got to do is re-engineer the outcomes we want first.
But you've already said he's the man you're going to work with.
Yes, I'm going to, because he's a brilliant CFO.
Is he going to be a brilliant CEO?
That time will tell.
How long is the timescale that you're thinking about before you do get a new CEO?
Oh, these things take time. This is well-trod ground. Lots of people have been looking for CEOs. We don't want to go over the same ground, because if it's the same ground, it's people that didn't get the job, so we don't want to go there. Yeah. But there's one thing in our favour, and that is, if you're offered the CEO of Barclays, that is a really interesting thing to do. Lots to do here. It's not as if you're going to coast as an easy job. This is a very tough job, and it's only the best can do it.
You didn't feel left out of what's going on at Deutsche Bank, what's going on at Credit Suisse and others, did you?
No, of course not.
It needed reinvigorating, though, didn't it?
Yeah, but it does now. And of course, you just have to look at what I've done before.
Tell me about your capital position as well. I know it's something that was addressed on the call this morning as well, but do you feel you have enough strength in capital? Is now a good time, with a new man at the top, when you taking over as executive chairman in the short term, is it time to raise capital to strengthen your capital position? Your price to book and other metrics, not as good as some peers.
Yeah, well, no, it'd be very expensive for us to raise equity, and we don't think that's something that we want to do. And we think there's plenty of self-help around here. We're quite comfortable that we'll get to our capital ratios, but what we need to do is get there quickly and then release some funds either for dividends or for investment in the businesses.